Hello, this is John Piper with the weekend video, and it's Saturday the 29th of September, and we're starting with the DAX again this morning. Basically been in this triangle all year since late January. A, B, C, and looks like we're heading up for a D wave. Of these two peaks, they're very close, but the second peak is actually slightly lower, so it can't be a fifth wave. I mean, okay, it could be a fifth wave failure, but I think we'll ignore that for the time being. And it looks like a corrective A, B, C. I thought it might be impulsive, but the fact we didn't see a new high there suggests otherwise. So when this decline is over, it's not necessarily over yet, I expect to see a move up to the end of the top of the triangle. That might last all of October, I suppose, or maybe a bit quicker than that. Maybe a decline into later October, November, and then perhaps the exit rally starting up from a base around this triangle. That would be quite a reasonable scenario, and a New Year rally into December, January perhaps. So the DAX looks like it's not out of the woods yet, but you could see a decent end to the year. Right, Wall Street, this is a 15-minute chart. So we saw the new all-time high around 26,800. It still looks pretty correct to this move. There's no real form to it. If there's no real form, then it tends to be correction. I mean, there are fives in it. I mean, there's possibly a 5 there. 1, 2, 3, 4, 5. Maybe that's a C wave. Oh, that's actually lower, isn't it? So, I mean, it's not impossible. It's an impulsive wave, but it just doesn't really lend itself to an easy breakdown. I mean, there's a 5 to there, say 1, 2. The 4 is quite deep. Almost takes out the bottom of 1. I think it's probably a correction. I mean, it needs to see something more dramatic to confirm its impulsive move. We may well see a retest down here if the DAX is going to go a bit lower. Wall Street might do, but the DAX could easily bounce very quickly. It's seen enough of a decline in the short term to complete that B wave. So we'll see how it goes. But at the moment, I think the trend is still up in Wall Street. Right, gold, no real change of opinion here. We've got this possible 5, followed by a rather protracted A, 5 wave B, C. Now, I said the key level was around 88, that's now been broken, but so far it's a false break. So that's one point to make. We've also got the Fibonacci 61.8% retracement around 1180, so I down here. Which is where the bounce came from. So there are a few positives building up here, but certainly any break below there and acceptance below 1188 and or would be a negative. But at the moment there's some encouragement, but we need to see more. Right, Bitcoin, this pattern here since the low at 5897 remains fairly dismal. But let's go back a little bit. Okay, it makes more sense from 577. There's a possible 5 there. It's rather tenuous. Possible A, B, C, flat correction, maybe down to 5897. But this is really wishful thinking. I think it's all looking a bit dithery. I think we're more likely to see a break below 5.7, maybe to 5.5 or even 5,000. But I do expect a solid rally by year end. That seems the most likely outcome here. If we don't see that, then I think there will be a sort of quite a deep feeling of gloom in the community, and the ground will be set for something quite dramatic like next year. That's my overall view. So I think it's still a very positive place to be, but it may easily want to sort of pile on a bit more negativity before a rally comes in. Certainly, we need something quite positive to dispel the current chart pattern. Right, that's all for today. Hope you found it interesting, useful. Back to report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.